Broader markets, though, are higher as we look to end a short holiday shortened week. Take a look. The Dow Industrials up 97, the S&P 500 up 11 3/4, and the Nasdaq higher by 27. The markets will be closed tomorrow in the observance of Christmas. It will be another big day for economic data this morning. We'll get readings on personal income and spending, jobless claims, durable goods orders, and consumer sentiment. All coming out this morning at 8:30 a.m. Eastern. We will get you all those numbers when they hit the tape. In the meanwhile, joining me right now is Kyriba senior strategist Wolfgang Koester. Also joining the conversation all morning long this morning, former Trump and George W. Bush State Department Senior Advisor Christian Whiten is here, and Strategic Wealth Partners President and CEO Mark Tepper. Gentlemen, great to see everybody this morning. Thanks very much for being here. Wolfgang, kicking things off with you with all of this data that we're expecting this morning. We got the GDP yesterday showing the economic story really slowed down by year end. What are you expecting out of the data today?
I think that we're going to continue to see very positive information. But what's important for the investors to really look at while the stock market continues its bull run, if you wish, is to really look at what companies to invest in. And as you know, we look at it a little bit differently. We look at it from the perspective of how are these companies managing their cash flow? How are they managing their liquidity? And how predictable are they and how resilient are they? And those companies that are resilient on cash flow and really good at managing their liquidity will continue to outperform others who are not. You just mentioned JD. They're not doing as good of a job on liquidity. Therefore, you see what the share price is doing. They're looking at shifting it up. One of the things that companies you've seen also doing is the repurchasing of shares. Again, one way of actually managing your liquidity. Do you have too much liquidity? If you have too much liquidity, how much do you give back? Therefore, you could be boosting your earnings per share. All these things factor into bullish stocks.
Sure. So what stocks do you like right here in terms of the companies doing things well?
Yeah, I mean, I'm trying to be more general about it, but I do like an Apple, for example. They're a perfect example about repurchasing of their liquidities, of their equities, et cetera, back there. I think the biggest example right now of that, you're seeing overall a repurchase of shares in excess of $3.14 trillion. That's the biggest repurchase we've seen in a long, long time, if not forever. And so we will focus on the ones who are really managing that. But repurchase is not the only one. Who's making investments? How are they managing the investments? How good are they in actually forecasting it? And with anything has shown us in the last 18, 20 months, it is about the companies who could actually withstand these high volatile times that we're seeing, whether it's an Omicron or whatever the variants are that you have, or other volatility that is being infused, for example, by the Fed.
Yeah, it's a great point. Mark Tepper is here. Go ahead, Mark.
Hey, Wolfgang. Look, I read through your notes. It seems like we're on the same page. We think a lot alike. I read over and over and over again, cash flow, cash flow, cash flow. I agree. I think cash flows are going to be king in 2022. But here's the thing. As of right now, 18% of the Russell 3000 trades at or above 10 times price to sales. So they may not have any cash flows at all. And that's actually higher than back during the tech bubble when we were at 14% of the Russell 3000. So I agree. Cash is king. Cash flow is king. But what do you think happens to all those longer duration stocks, those high growth, high multiple names in 2022? You think they continue to get punished?
I'm not sure they will continue to get punished. I think you do have to, as you said, really look at the individuals who are doing this well, right? So they're in those high growth stocks. There's some who are actually not doing it well. They think it's just going to continue to grow on. On the other hand, people are looking at the equities in general as a inflation hedge, right? So you're looking at what do I have here from a revenue perspective? I'm growing my revenues because my inflations are increasing. That's the best hedge short term to do, unless you're going to talk about hyperinflation.
Wolfgang, let me get your take on Bitcoins. Bitcoin under pressure as former Twitter CEO Jack Dorsey is predicting that Bitcoin will eventually replace the dollar. I spoke with President Trump this week about this and asked him his thoughts on crypto. Watch his response. Listen to this.
I never loved it because I like to have the dollar. I think the currency should be the dollar. So I was never a big fan, but it's building up bigger and bigger, and nobody's doing anything about it. And I know it so well. Look, I want a currency called the dollar. I don't want to have all these others. And that could be an explosion someday, like the likes of which we've never seen. It'll make the big tech explosion look like baby stuff. I think it's a very dangerous thing.
A very dangerous thing, Wolfgang. What do you say?
Well, I think that, a couple points there. One, Dorsey, I think he's talking a bit of his book, right? So he's going from Twitter. Now he's all in on Square, his new company. I think they're renaming it Block. So he's talking his book a lot. Bitcoin is it, and the countries don't know how to push the electronic currency. It is interesting that former President Trump does talk about that he wants to keep the dollar. Under his administration, they were very reluctant to actually look at the electronic dollar, and now you're starting to see that significantly pick up. The facts are this: 80% of governments today are looking at establishing their own electronic currency. The Chinese are far ahead on this thing. The United States is a bit behind, but that's not a bad thing, because as the United States dollar is the prevalent currency, and unless they're too slow, will remain the prevalent currency, for the United States to be cautious about how to make sure that they do this right and there's no problems coming from an electronic point of view. That's the future. They're known as CBDC, central bank digital currencies. That is where it's going. Bitcoin is going to be, as many others, an alternative asset that people will speculate in. But at the end of the day, I'm an absolute believer that central banks will issue their own electronic currency. And quite frankly, that is necessary. We are in the 21st century, not the 19th century. In the 21st century, we need to really optimize and really redo the global monetary system. The electronic currencies will do that.
Yeah, well, we're certainly talking about digital assets quite a bit. Wolfgang, it's great to see you. Yeah. Merry Christmas.
My pleasure.
And we'll see you soon.
Merry Christmas to you.
All right. Thanks very
Maria.
much.
Bye-bye.
And to you. Wolfgang, thank you. Koester.